Good evening, everyone, and welcome to tonight's session, Navigating Payroll Tax Changes in Dentistry. My name is Sean Perera. I'm the Chief Technology Officer of Centaur Software, the home of Dental for Windows and Dental for Web, and I'll be your moderator tonight. So we know that many of you in the last few months have been filled with headlines about High Court rulings, expiring amnesties, and all sorts of different news about payroll tax. So tonight's goal is not to talk about the threat. It's about giving our audience some practical, technical, legal ways to navigate this landmine that is called payroll tax. So couple of quick housekeeping notes. We have 45 minutes tonight, so we'll go at a decent pace. Please use the Q&A panel to submit your questions anytime. We'll get to them as appropriate during the webinar. If not, we have time allocated towards the end to answer everyone's question. This session is being recorded, and a link will be sent to everyone that registered after the event. So tonight's webinar is hosted by Centaur Software and presented in partnership with Jeeve Pay. And Jeevan, good to be partnered with Jeeve Pay as always. Now, to help us navigate this topic, we have a great panel of experts here tonight. Let me introduce them. And before that, yes, let's go. Harry Nicolaidis from K&L Gates. Harry is a leading legal expert in dental structures and a partner in the litigation and dispute resolution group at K&L Gates. He has more than 30 years experience in major litigation and dispute resolution with deep expertise in the healthcare sector, in particular dental practice owners. Harry, welcome. All right. I think Harry's frozen, but I'm sure Harry must be here with us. And we have Bhupesh Kaphle from BDO. Bhupesh is a specialist medical accountant at BDO, one of the Australia's leading advisory firms. He deals with feet on the ground reality of audits and work closely with dental practice owners across the country. And he helps dental practices assess risk, model the financial impact, and get structures right before the deadlines hit. Bhupesh, great to have you.
Thank you, Sean. Thanks for having me. Looking at that picture, it might be time for an update because it makes me look much younger than I am.
Well, it's always good to push it as long as we can. And finally, last but not least, Dr. Jeevan Sivalingam. Jeevan is the CEO of My Dentist Network and co-founder of Jeeve Solutions, the home of Jeeve Pay, which has become the #1 compliance tool for these payroll tax changes. Jeevan is a practicing dentist and a multi-practice owner who built Jeeve to solve a problem he was living himself. So tonight we're lucky because Jeevan is able to bring genuinely rare perspective tonight. Clinician, operator, business owner, software founder. Jeevan, welcome.
Thank you, Sean. Good to be with you, and I'm looking forward to answering some questions.
Definitely. All right, let's get straight into it. I want to start by making sure that everyone in the room has the same foundation, because payroll tax, the whole concept of it, as we understand it, has evolved in the last few years, and some of you may not have been keeping your ears to the ground, or some may have said, you know what, it's all too complicated. So I want to make sure that everyone is starting at the same starting point. So Bhupesh, for those who haven't been up to date with payroll tax, can you give us a quick rundown on what payroll tax actually mean for dental practices and what these changes and how they impact and what has changed and why is it all of a sudden a pressing issue, or it has always been a pressing issue?
Yeah, thanks, Sean. Look, I think your last comment there is really the one that resonates. It always has been an issue, or at least it's always been law. I think what's changed is the interpretation of the law and enforcement of the law. I think that's really what we've experienced differently, particularly in the last 2 years for medical practice and, of course, dental practices. So taking a step back, what's payroll tax? It's been a state-based indirect tax that's been here for a number of years, and it's been harmonised over a number of different iterations. But ultimately, there is still some quirks at each state. But really, what payroll tax essentially does is for businesses that have wages and salaries and similar expenses, such as fringe benefit tax, as an example, it looks to add an additional tax to businesses for going over a certain threshold. So, we've been really, what we've seen commonly for large dental practices previously is, if you've had auxiliary staff, so non-clinical staff, being on salary and wages, those costs have been considered. And if you're over the state-based threshold, there is a payroll tax component to pay to the state government. What shifted in the last 2 years in particular is how the government is now assessing service facility payments and that arrangement, I should say, to dentists. So, and Harry will attest to this, to the extent that service facility arrangements were appropriately implemented, and that's a big caveat, I should say, but to the extent they were, those payments were not considered, or that arrangement was not considered in terms of being considered taxable wages for the purposes of payroll tax, which is quite substantial for dental practices. If we think about what that could mean from a billings perspective, it could be up to 40% potentially going out, or at least being considered taxable wages. And that's what's changed in the last couple of years. What we've seen is some guidance come through, probably driven by Queensland, unfortunately, but it's permeated throughout the other states, which essentially put in the spotlight these arrangements that have been considered and accepted broadly around these service facility arrangements that, when implemented correctly, they are not deemed to be captured by the payroll tax provisions. That's changed. And so all of a sudden, we've got two things happening. One, practices that previously didn't have to worry about it are now in that conversation because a big component of operations all of a sudden coming into the equation. We all obviously know that outflows to dentists and clinical staff are the biggest costs in our dental practices. And then again, those who have already been in the system now all of a sudden have a higher payroll tax component to pay. And when I'm talking about small numbers here, when we talk about 30-40% potential effective payments out of billings being now captured into a payroll tax conversation, it's a big number. And in every state, slightly different, but what we're talking about is approximately 5% of those costs all of a sudden being additional indirect tax payment to the state government. So the law's not changed, interpretation and guidelines have, but all of a sudden, because the impacts are so strong, we've really, dental practice owners have really sort of had to take a step back and assess how much of this impact is going to hit them. And it's a true dollar impact to the extent that potentially it does come through. So that's where we've sort of landed, and hence where we are today.
Well, so the structure that most dental practices have been using for a number of years, the service fee model of treating associates as contractors, is now under scrutiny.
That's right, and I think it's very important to make a distinguishment here. And again, I'll steal a little bit of Harry's thunder in the sense of it's important to make sure we make that distinguishment. There's a service fee, commission type arrangement, and there's a service facility model. And the service facility model, when implemented correctly, was one that was giving some mitigation to payroll tax. And so we weren't necessarily being caught in that environment. Commissions and contractor arrangements broadly were. There are some exemptions, but for all intents and purposes, they were captured. Now, subject to, unless there's some other changes we'll talk about shortly, broadly, everything is being considered and we have to go further to see where there might be some mitigation to be pulled out of the payroll tax system or the payroll tax treatments.
So that brings me to Harry. Harry, as we move deeper into 2026, the safety nets are gone, most notably in Queensland. So for a dental practice owner who hasn't structured yet, what does day one of the new financial year actually look like from a liability perspective?
Sean, that liability perspective comes down to assessing and looking at the risk. Just like any other risk in a business, payroll tax is just another risk, or the way in which you structure your arrangements is just another risk. What do you do with each of those when you come across a risk? You have to identify precisely what it is, firstly. Secondly, any good business owner will try to transfer that risk somewhere else in some way. And thirdly, whatever risk is left that they can't transfer, they need to manage that in some way. So that's the broad outline of the liability issue that is made live by this payroll tax issue. To put your question though, which is quite a broad one, into some context, it won't surprise the audience to know, of course, that the answer to it, what does their liability look like going forward, depends on a whole number of things. So firstly, most importantly, you hear this all the time, what are your particular circumstances? Which state are you in or territory? What's the size of your practice? How many practices do you own? Are they owned under the same entity or not? How many employees do you have independently of your dentists? How many dentists do you have a contract with? How much is each dentist working at each of your practices? We heard earlier about exemptions potentially. So that's the first thing. The second thing is, what does the current and the prior contractual arrangements with the dentist look like? Some practices will employ graduate dentists to start with for a year or two, move them on to some different arrangement. It might be an independent contractor arrangement or quite different arrangement called the Services and Facilities Agreement, the one we're basically looking at tonight. Are those contracts properly documented? A number of situations that I see where the contractual arrangement is based on a couple of emails, a handshake, a conversation, and then when it all goes wrong, suddenly people go scrambling for what the terms of the arrangement are and nobody really knows. And they come down to, was I paying you or were you paying me? And that's an important thing when we come to talk about the flow of funds and the nature of an SFA, of course. Have those contracts been amended or varied by conduct? So that's an important thing. Thirdly, and there are two more points after this, is the arrangement that's been entered into with the dentist in their capacity as a sole trader, or have they set up a company? That makes a huge difference on a whole lot of fronts. Fourth, what's the exposure in the event that you are audited or reported or whatever, both for your historical liability and going forward? Are you already paying payroll tax? We've got some situations where people approach me and they tell me they've got an SFA in place, and they also then tell me, and we're collecting a portion of money and we are paying payroll tax for it. Those two concepts are inconsistent. So people are doing the wrong thing by putting together the wrong components, thinking they're doing the right thing and de-risking, but in fact, they're just creating a bigger mess. So finally, then, this is a really important part. Once you've done that process that I've just mentioned and analysed and assessed what your risks are and everything else, you've got to then work out what your risk appetite is and what your tolerance is for risk. Some people have a great tolerance for risk. The risk may not be that great. A lot of practices that approach me, sometimes we get to the end of the discussion and I say to them, your potential risk in relation to payroll tax is $10,000. And they go, I don't know what I was worried about. And I go, well, maybe you're worried about these other risks, and I can tell you about those, but we can come to those later on. But other practices might have a significant liability. And we've had situations where the potential liability is upwards of, $500,000 or more. But those clients might be prepared to take that risk and keep their current arrangement. That's entirely for them to decide. So it's really important that they do the maths, as I always say, decide what risk you're prepared to take, and then taking into account two things: your particular circumstances, and here's the really important one, the commercial reality of negotiating with dentists. Some dentists, just like any other commercial contract, will say, I'm not having that, I'm not having that. If you want me to operate at your...
I think we lost Harry there for a second. Yep.
Yeah.
Harry, we lost you there for a second.
Okay, sorry. I'll just go back about the risk tolerance and risk appetite. Have a look at your circumstances and the commercial realities of negotiating with a dentist. Some dentists push back on the arrangement that you want, that we would recommend, for example, because we take into account about 8 or 10 things in our agreements. But we let the clinic decide on what fits best with what their arrangement is and how they want to contract with dentists. Some dentists push back on the structure that is proposed. Then it's a question of, there are ways in which that can be engineered to reach a good consensus. And finally, of course, all of these things that I've talked about, get advice from the right people, from the accountants that know what they're talking about, from the software providers who know how to set things up, and from your legal advisors who can tell you all about the structures and about all of the risks. And I'll finish answering that question there now, but just be aware, we're talking about one particular tax and one particular risk here at the moment, but there are several things which SFAs address in terms of risk, and it is not just the payroll tax risk.
Thank you, Harry. That's quite important. So talking about accountants who know what they're talking about, Bhupesh, you get to be in the room with auditors when all these audits are happening. And right now, the question is not whether you have exposure, it's how much exposure. So we have seen updated guidelines from Revenue New South Wales and Victoria and SRO recently. So which states are being most aggressive in dental audits right now? And what are the red flags they're looking for in practice reports?
Yeah, sure. And I think what's important with that, Sean, is the reason we're probably talking about why now or why we're looking at exposure now. It's because the amnesty for the vast majority of states that was initially provided to sort of work through this, essentially they've ended. So we're now well and truly in the environment where the regulators are asking questions. I wouldn't say it's been a floodgate of audits. I think there's been lots of notices sent out. Don't get me wrong, we've certainly had a handful of clients that have, unfortunately, been the unlucky ones that are the cabs off the rank, so to speak, that have obviously run over a black cat in somewhere. But we've certainly seen that actually ramp up. And what I would say is, I'd say the 3 states in particular, if I had to generalise, that we're seeing some activities: New South Wales, Victoria, and Queensland. So our eastern seaboard is well and truly up and running. And I think from our perspective, the items that previously were areas of interest in terms of red flags still hold, quite frankly. Now, as I said before, the enforcement's changed because we're now into post-amnesty. The big thing I would say that has changed, that was different to I'd say that 18 months, 2-year period where we've had this sort of ambiguity that's come through, is the flow of funds. So prior to, I guess, this whole discussion kicking off again, as I said a couple of years ago, we were mostly in the collections model. And what I mean by that is patient fees were going into the practice bank account and then dispersed accordingly. That's a bit of a no-go, really, at this point in time. So if you look at the various rulings that have come out and guidelines, and I should say it's not law, it's guidelines, but you've got to be brave enough to fight your position. I think it's an expensive position as well. But to the extent you follow those guidelines from regulators, what they're saying is you need to move to a non-collection model. have everything else in place, of course, as I said, from the accounting legal side. The key part is non-collection, which means the flow of funds must go to the dentist, and then it must be transferred to the practice. So that's can be quite challenging. There's a lot of admin in that, and hence again, software providers and things like Jeeve Pay are quite critical to make that a more efficient process. But that's the real big change. Now, I think it's still important to flag some of the other key elements, and I'll touch on the accounting ones as opposed to legal, given my expertise. But making sure you're then recording your operations and your engagement, and your arrangement, I should say, on your different legal and accounting documentations is critical. So if you've got a service facility model, make sure business activity statements, tax returns, and financial statements reflect that. So if you're running an SFA model, I'd expect your net SFA payment to be your revenue item on your financials. If you're showing your whole in the documents you lodge with the ATO, all your billings coming through and essentially saying as a practice I'm collecting billings, you're at odds with what you're sort of trying to position. So all those items flow through. And I'd say the other key part of that non-collection model piece is, and something that's sort of been catching some people off guard, practice can't control that bank account. That's really critical. So we've said, well, we've set up these bank accounts, but we control them, so we can just make those transfers ourselves. That's a no-no. You cannot have control. Read-only access looks to be okay from everything we're seeing. And maybe if the contract allows, and this is where you need the appropriate lawyers involved to assist. Of course, Harry's on the call for a reason today. Direct debit arrangements, if facilitating, can work. But just having control, even joint control, it's pretty clear in the various rulings that are coming through and guidelines that is not acceptable. And so it's very important those things are considered. So I think they're the big red flags for me in terms of, I guess, what's pertinent based on what's changing. And as I said before, make sure the contracts are also aligning as well. The terminology, the way you communicate with your dentist, all those things must be in concert. But certainly the first few questions we're getting asked from the ATO are, give us your contracts, who controls the bank accounts, where are your bank accounts, and what are your BAS statements saying, your financials. If they don't tell the right story and tell the same story, we get more questions, fair to say.
Wow. So Jeevan, you must be talking to dentists about this topic, practice owners and dentists about this topic more than anyone in the country right now. So I want to know how people are actually dealing with it. So what is happening in the industry right now? Are practices making changes, or are most owners still sitting on their hands waiting to see how this plays out?
Yeah, I mean, that's a great question, Sean. It's something that's been definitely evolving over the last 18 months. If we look at our colleagues in the general practice and medical space, the debate's essentially over. 80% of medical clinics have already migrated to the new flow of funds. They were the first hit and the hardest hit, because remember, their associates are on 70% commission, right? So they were really exposed. And once they saw these positions in court, they moved quickly to protect their businesses. In the dental industry, we're seeing more of a top-down transition. So the large corporate groups and the large dental groups, they've either already moved or currently in the final stages of that process. And I've spoken to almost all of them by now. They've got the most to lose, and their legal and tax advisors are saying it's no longer an option. They're just telling them you need to move right now. For small groups and large dental clinics, this is where it gets a little bit more interesting. We've seen probably maybe 20% of the segment start to move across. And they're probably more proactive kind of owners who really want to be on top of everything. And then we've got what we term as the anxiously stagnant group, which is, to be honest, about 70% of dental clinics, where they know there's a problem, they've seen all the webinars, they're aware of everything that's going on, and they're really, really worried, but they just are paralyzed by the perceived complexity of changing. They just think it's too much, and they just wait till something happens. To me, I kind of look at this similar to, Bhupesh was talking about the way, or I think it was Harry who was talking about how there used to be a contract arrangements, and now most agreements are kind of captured in service facility agreements. And obviously I've been a dentist for almost 20 years now, and I saw that process, and it started with the large corporates and the large groups, and then it started trickling down during the industry to And I think that's going to be similar here. I think we're probably like somewhere in the early to mid cycle of this change. I think you're going to see a big kind of transition over the next 12 months.
Yeah, thank you, Jeevan. That's a really good context about what is happening in our industry. And that also brings us to the case that everyone is watching, because all these things we are talking about sits in the shadow of a benchmark decision that could come any day. So this is the Uber High Court appeal. Let me give everyone a bit of a timeline very quickly because it matters. In September 2024, Uber won its first round in the New South Wales Supreme Court. And in August 2025, a 5-judge panel in the New South Wales Court of Appeal unanimously overturned that and found that payments to Uber drivers were taxable wages, leaving Uber with a tax bill of $81.5 million. So Uber sought to have special leave with an appeal to the High Court, which was granted in December 2025. And the High Court hearing took place on the 8th of April, which was nearly a few weeks ago. And we are waiting for this judgment right now. So Harry, the industry, the people that are interested in this topic, they are watching this very closely. And so it is buzzing about Uber Australia versus Chief Commissioner appeal. If the High Court rules Uber's fees are taxable wages, does that effectively end the argument that dental practice is just a collection agent for its associates? And what is the current status of that appeal, and how will it have any impact on our industry?
Let me answer that in reverse order. It will certainly have an impact on the dental industry. There is no doubt about that. Next question, when is the decision likely to come down? If you're brave enough to ring the High Court and ask it to follow up and hurry up with its judgment, if you're one of the parties, you'd love to know. If you're the successful one, you'd love to know. The short answer happens in the High Court. There is anyone who's particularly interested in it and can't sleep at night, jump onto the High Court website and you can download all the submissions from the competing parties and the 100-page recent oral argument that was held. So we don't know exactly when, but everyone is waiting, and it's an important decision, so they won't sit on their hands longer than they need to. Now, going back to the first point about, well, how will the decision matter? Does that put an end to the agency argument? What does that mean about flow of funds? It's very easy when you to group all of those questions together and expect a court to give a final determination on each of them in the way in which you want. So everybody's clear. What courts decide is only so much as they need to decide to determine this particular case. If they don't need to touch an area or go into an area that is not determinative of the issues between the two parties in the case, they won't go there, even though we might want them to. Sometimes I'll give you little clues about what the idea is about those other issues. Why do I say that? We're focused on this agency argument, but essentially what the appeal is about is this. The fact of the existence of the agency itself, what I mean by agency is Uber saying, hey, look, they're not our employees. We're just collecting their money on hence the agency argument. But what the High Court is really concerned about is two things, and the agency argument fits into these. The first thing is, what's the extent? They look at the substance of the arrangement. What is the extent of the financial and economic integration between Uber and the driver? And in looking at that, you look at a whole lot of factors, how the billing happens. Is there, who does all the booking? What's the branding issues like? Who has control over the fees? Who has, as Bhupesh said, control over the money? Is Uber in control of the money at all times, or does it have conditional control over it? Either way, any element of control over it is a negative thing for Uber, and that's a big thing that they have to fight against. So it's you see that level of integration, of economic integration, is quite critical, and you can all draw analogies with what happens in dental practices. We set up structures and arrangements where we try to separate the economic businesses as best we can. Sometimes people just throw that out the window and go, oh, it's my money. Oh, it's all my money, says the clinic owner. I can pay rent out of it. I can top it up. I can repay it. And they do all sorts of crazy stuff like that, which obviously gets them into trouble because it has to be treated as if it is the dentist's money. The second thing the High Court's looking at is, of course, that it's not just the economic integration, but is there a fee, and this is where the payroll tax trigger comes in, is the driver performing any work for or providing any services to Uber? Let's just make the analogy clear. Is the dentist in the SFA arrangements providing any services to the clinic? And the traditional answer has been no. All the services that the dentist performs are for the patient. Patient pays the dentist. Yes, the clinic collects the dentist's money, the agency issue we talked about, and then it distributes it according to the contractual arrangement, the SFA, how that works. So High Court's has to grapple with what the Court of Appeal said, which is why Uber lost at that level, which is why Uber's appealing. Because the Court of Appeal said, yes, the drivers are performing services. The money that Uber is sending, let's not call it a payment, the money that Uber is sending to the drivers is, they held, money for, in respect of the performance of work that the drivers have done for Uber. And what services have they provided? Let me draw the analogy with the dentist. What services is the dentist giving to the clinic, to the practice? The courts have held, well, we're not quite sure exactly what that's worth and how many services they provide, but they're generally in the nature of, firstly, contributing to the practice's goodwill, preparing clinical notes that the practice can use. The clinic doesn't get to charge its services fees unless there's a dentist performing dental treatment at its clinic. So it's in respect of the performance of work that the courts have said, we can see some performance of work. We see what you call the arrangement. What we're going to say is the dentist is providing services not only to the patient, but it's also providing services to the clinic. And because it's doing that, the only payment, so to speak, or using the precise language, deemed payment that we see is when the clinic sends back the 40% of the fee to the dentist. And that's the bit that the Revenue Authority says, we'll have that included in your wages, thank you. Here's the thing about that issue, which is a really critical one to the topic we're talking about tonight as well, about the flow of funds. The fact that there is money going from clinic to dentist is what the authorities have seized on. If the money, 100% of the money, and I saw one of the chats, one of the questions that have come through from the audience was talking about what's the difference between if it goes to the dentist, but on paper, in practical terms, it's coming to the clinic. It can't do that. It's either one or the other. So if the money goes directly, 100% of the patient fee, when the cards are swiped, FPOS at the ICAPS is swiped, it goes directly into the dentist's account. The clinic has no money. The clinic is holding nothing. So at the end of the period, a bill is rendered by the clinic to the dentist, and so it's just like any other. It's just any other service that you go out and that you provide. The bill goes out. The dentist then pays the services fee. The only direction that money is going is out of the pocket of the dentist into the pocket of the clinic. So you remove that element, one of the key elements that triggers what's called a relevant contract and a relevant payment under the payroll tax legislation. So that's why that model has found favour. But let me be clear, if dentists and a lot of my clients don't want that model, they say, well, tell me what the risks are if I don't have that model. And I tell them, and you can build in other protections in the services and facilities agreement to accommodate that. As I mentioned before, identify what the risk is, transfer what you can, manage the balance. That third one is what you do with a properly crafted services and facilities agreement. It's a long-winded answer to what the High Court appeal is about, but the reason it's important to stress it is if we go back 2 or 3 years to one of the key decisions that started this snowball, if you like, because as Bhupesh rightly said, the law hasn't changed. So what is it? Why is it suddenly that we're having all of this momentum built up? And there's a couple of cases, and one of them in particular that everyone's probably heard of is that Thomas and Naz case, which basically was a doctor's clinic. And the reason I raise that is because I think there were 10 doctors in that clinic. 7 of them had a model effectively where the clinic collected the money on behalf of the doctors. 3 of the doctors had an arrangement where 100% of the patient fees went directly into their personal accounts. The commissioner only attacked, and that case was only about the revenue in relation to the 7 doctors where it was collected. It didn't touch the others. And the recent, at least the Queensland Revenue Authority's public ruling, and to the extent it's mirrored in the other states, reinforces that, I'll call it protection loosely, but it's sort of a protected area to date. There could be another legislation change, there could be a new interpretation, but at the moment, it seems to be a relatively safe haven to have a model where 100% of the patient fees go into the account of the dentist.
Yeah, thank you, Harry. We can be talking about this for hours, but let's get into some real-world scenarios. Bhupesh, you work with quite a number of large practices, and can you walk us through some real-world scenarios, either you have personally been involved in or that you are aware of, covering all kinds of structures practices were running, and what were the exposures like, and what have they done about it?
Yeah, it's a really good question, and I'll probably pick on maybe a few points and maybe the most common ones for the audience, because as you mentioned, Sean, we could be here till next year. We went through all of them in detail. The one thing that I'll start with is the amnesty. Certainly on any audit or review, the first thing that's been looked at is, have you applied for the amnesty? That's the first question, because that really starts the conversation around, is there any retrospective exposure? So obviously, if it's retrospective, the bill is likely to be higher. Circumstances are important, but that's invariably the first question that's being asked in any review and audit. Now, subject to that, there's a number of things that the auditors or the state regulators are going to ask. What's been interesting is, of course, the non-collection model. As I said before, Harry touched on it. How is it being executed and implemented is critical. But the way that we've seen these questions come through, it's not as let's say forward as do you operate a non-collection model? What do you think your exposure is? And then you have the discussion. We're getting asked questions in lots of iterations because they are trying to build some facts in the background to make sure it's suitable for their potential position they're taking. So we'll get asked a bunch of questions initially. What's your operations? And look, they're probably looking for things that might catch you out. So if you refer to things like commissions instead of facility arrangements, or the way you're referring to payments, as Harry said, if those things are coming through as inconsistencies, that's going to be noted. And what you'll find is a level of interrogation and question starts to then gradually increase. And we're getting to the point where now regulators are asking for, show us your practice management reports. Who are the dentists? Who are the providers? They are then matching them to ABNs that are available through ABN lookups, and they're trying to see how have you made payments. So, or how have you recognized payment or classified that. So to the extent that they are looking at your practice management reports and you haven't declared anything for Dr. Joe Blow, and they're searching Joe Blow as an ABN, we are then getting questions say, why have you not give us any details on that dentist and that provider? So it's very detailed. The questions are very detailed, but you can see it's iterative, and it's because they want to see what information you provide. So look, unsurprising, it's self-serving, but if you are getting asked the question from a regulator, get a lawyer and an accountant involved that knows what they're talking about, because what you respond will be quite critical. The other part then that's coming through in that discussion is also around grouping. So it's not something that we've sort of specifically talked about in this whole change in ambiguity around non-collection model, but as more practices are being potentially caught in this threshold because of the way that potential position of as FA payments has changed, what also is being asked by regulator is, should you be grouping other practices in your calculations as well? Because what the various state regulators say in their provisions are, your payroll tax is actually calculating the aggregated group taxable wages. So essentially all your businesses. Now, again, there's rules around it, and ownership and shared employees and all these things come to determine if you are grouped, but it's certainly a question that's being asked. Look, we've also seen some instances where there's been some positive outcomes for our clients in the sense that when we've had multiple questions asked, our clients have actually had the right flow of funds, they've had the right contracts, and we've been able to push back on the regulator. And they've accepted that position as well. So it's not all bad news, but the key thing here is the process is iterative, it's lengthy. I know that's not probably what everyone wants to hear. The only way it's short is you put your hand up and pay what they want you to pay. But the reality is that might not be the right thing to do. And so, unfortunately, it is an iterative process. So the question is basically being asked. I would say, I sort of touched on it before in terms of real world examples. New South Wales, Victoria, and Queensland are probably the most active at the moment. It's not floodgates. New South Wales also has a really sophisticated data matching system. And so, if you're lodging other data points to other regulators, they actually connect in the background, probably better than other states. So very important to make sure that, look, in all states, obviously getting your ducks in a row, but, certainly putting your head in the sand, that argument's probably going to start to get a little bit harder to do, particularly in New South Wales. Victoria is the most aggressive in pursuing a revenue item, I would suggest, because of maybe the state is from a budgetary perspective, maybe. But certainly our dealings are there a bit more forward and aggressive. In Queensland, although we haven't seen the floodgates open by any means, we certainly know from what we're hearing that there is certainly more officers that have been put on in Queensland. So they're not necessarily saying that that's necessary for medical businesses, but you read and tell what you will, but certainly we know the resources have increased. So they're probably the real life things that we're seeing. One thing that's worked really well, and we've had this conversation with our clients multiple times, and they've fastly have implemented it, is make sure you look at your insurance policies. So what a lot of people don't realize is in your normal business insurance policies, there's normally in your product description, there's a carve out that sort of says you're covered for accounting legal fees for any state-based or federal-based reviews, investigations, etc. So where we've had the most success in pushing back where appropriate is when our clients have also had that audit cover, which has meant we can be engaged without the fear of significant overruns or anything like that, and actually put a case forward. Because, as I said, it's a lengthy process. So to those, I guess, from real world example, that haven't necessarily got audited yet or reviewed yet, go check insurance policies. Make sure they hold up. I think that's a really practical thing that we've seen work. But look, but the reality is, Sean, it's real, it's happening. And the question we're getting asked are actually really poignant, and they're getting to, as I said, practice management reports. That's the level of detail we're getting into, and matching dentists to ABN. So this isn't pie in the sky stuff. This is we're here and it's happening, and the questions are real.
Bhupesh, we are almost at time, but let's pick up the pace because we've got some very important things to talk about. So Harry, one of the terms that we hear about every time someone talks about payroll tax is a separate holding account. So very quickly, tell us if this gives practices the perceived level of protection when it comes to payroll tax.
It is, we've sort of touched on this before. When we talk about as an agent, the agency model that exists for the collection models, really we're talking about one of the issues relevant to that. The purpose of a holding account, it's one factor of about 8 or 10 that are relevant in a court or a regulator looking at what the substance of the arrangement is, because that's what they look at. They look at the substance of it. We can call it whatever we like. We can say these other things don't apply. A lot of people want to rely upon a provision in the agreement that says this is not an employment contract. We are not liable for all this sort of stuff, and think, well, the parties have agreed. So why is that not the end of it? Courts and regulators don't do that. They look at the substance. So one of the things that they look at, of the 8 or 10 things that we talk about, is, as Bhupesh mentioned before, where's the money held? So if the money, remembering that the $500 patient fee that is paid over, where is that put? If it's put into the practice's account, then it says, I'm holding that money for the dentist. Mm-hmm. That on its own is not enough these days. It just isn't enough, because if you fall down on all the other issues and you can't establish that, let's call it economic separation between your business and the dentist's business, then you're in trouble. Not just because but if you don't have a holding account, you're in the worst situation, because if you have money coming into one single account, some of it from employees who might be OHTs, who might be graduate dentists, might be yourself as the clinic owner. They're sometimes set up as employees. That all goes into the one account. Then the dentists, a lot of people call it SFA money, comes into that account, and it's all mixed up together. Where's the economic separation?
Absolutely. So essentially, the cosmetic restructuring is not a fix for the structural problem. So this is exactly where the conversation has shifted, what genuine compliance looks like operationally, and that's where Jeevan comes in. So Jeevan, you built Jeeve solutions initially to solve problems that practices have from the inside. One of the many things that makes Jeeve Pay interesting is you connect with multiple practice management systems, and luckily Dental for Windows and Dental for Web are two of the practice management systems you integrate with, and I'm sure most of our listeners here use either Jeeve, D for W or D for Web. So you build this platform to solve a personal pain point that ended up becoming a product. So tell us a bit about how Jeeve Pay and the Jeeve Pay integration pulled data from Dental for Windows and disperse the money is dispersed to dentists without ever being treated as income for the practice.
I mean, Dental for Windows was our first integration, and Sean, you're probably one of the first people I spoke to about Jeeve Pay.
Absolutely.
And
Absolutely.
yeah, from my perspective as an owner, like the last thing I want to do is add more manual work for my management team or my associates. So what Jeeve Pay does is it makes the whole system go from a manual headache to an automated, auditable system. So to make this new collection model work, we need three things to talk to each other, and Jeeve Pay acts as that central intelligence that syncs data from number one, your PMS like Dental for Windows, number two, your account system like Xero, and number three, your banking platform and your associates banking platform. So we can actually track the movement of money. By syncing all of these three data points, we get a single source of truth, and that gives the practice total visibility of all payments, so then they can also be recorded back into your PMS. One of the biggest pain points for owners is cash flow and accuracy. Jeeve Pay calculates service fee based on both PMS data, and we also track the monies that have actually hit the clinician's bank account. We then automate that service fee payment from the clinician back to the practice. And this ensures that the practice maintains its cash flow. Because we've got bills to pay, right, including staff. And means that the manager's not going trying to chase the associates to transfer their service fee or spend hours on spreadsheets. And for the clinicians, it's also like a big win, because one of the biggest fears is that when you move to this collection model, they might get charged a service fee on amounts they never actually receive. Some owners are just giving them a bill and saying it's your problem. The other great thing is that they don't really actually have to do any extra admin work. The system handles the split, and the service fees transferred. So, having spoken to a lot of dentists and having a lot of dentists use our platform, like it really will make your life a lot easier if you do choose to move to this new collection model.
Thank you, Jeeve. And talking about owning a practice and changing the way the contracts and agreements work, one of the things that often gets overlooked is the human side of it. Because when you change how your associates get paid, you are essentially changing the relationship, not just the process. So how has this change affected the relationship at your practice with your associates? Are there any incentives or genuine positives that owners can bring into this conversation to encourage associates to move to this new payment flow?
Yeah, I mean, associates are worth their weight in gold at the moment, right? It's never been harder to find a good associate. So keep them on side is like super important to me. And for me, it's like emphasizing that this is going to be a win-win. We're not just changing the workflow, but we're also protecting all the parties. And the three things I kind of talk to them about is number one, zero extra admin. I think the biggest fear of this new model is that clinicians are going to be burdened with extra paperwork. Jeeve Pay automates that entire loop, so they can just focus on dentistry and let the system handle the rest. The second one is transparency. It's a big mindset change of when the money's going to their account and suddenly being taken out. And most associates hate this, black box of monthly pay. With Jeeve, they get their own dentist portal. They can see which payments have been cleared and exactly how the service fee was calculated. So it really helps to maintain trust in the process. And finally, a little bit of a sweetener is when there's an option that you can use in Jeeve Pay's platform that you can pay your service fee through a platform. And if you do that, you can potentially earn things like Qantas frequent flyer points on all of those transactions. So for a high billing clinician, that's a significant amount of points. And we know how obsessed dentists are with frequent flyer status and points and flying around the world. But yeah, overall, I think it's really important to just have that really positive conversation, not adversarial, and making sure that everyone's on board.
Thank you, Jeevan. So it is really important to frame this, that compliance conversation is ultimately a relationship conversation as well. So let's bring this home with some final piece of practical advice. What is the very first thing that a practice owner here should do tomorrow morning and before the end of the financial year to begin securing their practice against these new changes? Bhupesh, let's start with you, then Harry, then Jeevan.
Sure, I'll keep it succinct because I'm conscious of time. One, I'd be checking my insurance policy to start with. Next thing I'd be understanding is, once talking to my advisors, what is my exposure to payroll tax, if any? And then I'd be understanding my flow of funds and the associated documentation on lodging. So they're the key accounting things that I'll be looking at, because then that starts to give some context as to what might be happening from the accounting side moving forward.
Harry?
Yeah, look, harking back to what I said before, the minimum you should do is undertake an accurate assessment of your current position. There's a saying, an old saying that rings true: a little bit of knowledge is a dangerous thing. You might know a bit about a lot of things, but if you don't know a lot about all of these things, you're not doing yourself a good service, because you don't even know the risks that you need to face, and you don't know what the strategies are to deal with them if you want to take some of those risks or not. So in short, get informed, do the analysis, get advice, know what your situation is. If your advisor can't fully address all of the issues that we've talked about, and on top of that, you might recall I mentioned a whole lot of other risks, things like superannuation, risks when you're selling your business or when you're buying a business. These issues that we're talking about are relevant to those things. Potential employment liabilities if things go wrong. If your advisor can't give you that holistic advice about all of those things in, dare I say, less than an hour, then they're not covering the field for you. That's all it takes to really get a good picture of where you sit. Once you've done that, you can work out what you need to do, and you can work out what the options are and which ones you want to take. The compliance issues are many and varied, but you need to be able to navigate those, and you need to also be able to implement the things that you get your advisors to put in place in terms of the contract. Risk mitigation strategies, and lastly, obviously needing to negotiate and deal with the commercial realities of contracting with a dentist who's another party in a commercial deal. Can I just summarize with this? It's a trite analogy, but to use an example that dentists will be familiar with, when a patient walks into your surgery and tells you what's wrong, you don't immediately diagnose them and launch in with your treatment. You examine them, you investigate, you review, you consult, you assess, you provide options and advice and options. Then and only then can you make a decision as to what to do, implement it, you then monitor it and review it. Why you should deal with issues that we're talking about any differently is beyond me.
Thank you, Harry. Jeevan, what can our listeners go back to their practice and implement tomorrow?
Yeah, I mean, I think like Harry and Bhupesh said, first step is talk to your professional advisors, make sure that experienced advisors in this field, and do a clear assessment. But, I think it's also important to move from assessments to actually execution. Dentists, we have this tendency to procrastinate and overanalyze and kind of get ahead. I think now is probably the time to start to actually execute a plan. Plenty of clinics have actually already made the shift. All medical has as well. And I don't think it's as daunting as people think it is. So, for me, just take a deep breath, talk to advisors, and focus on executing.
Thank you. And that brings us to the end of tonight's session. And thank you to the panelists for answering the questions as we went along. Again, Harry, Bhupesh, Jeevan, you brought some real expertise and genuine candor to today's discussion. So thank you. And this is one of those issues where the stakes for practices are high. So tonight has given people some clear picture of where they stand and what they need to do. And the recording of this webinar will be available, as Kat mentioned, via email before the end of the week. And we will have our panelists' contact details included in that email. And if you like to learn about Dental for Windows, Dental for Web, go to centaursoftware.com.au. And again, to the audience for sticking with us for close to an hour. Thank you, and have a wonderful evening.
Thank you, everyone. Good night.
Yes.